Good morning and welcome to the Canaccord Coffee Break podcast. I'm Jane Parry, the Chief Marketing Officer here at Canaccord Wealth. And today I'm delighted to be joined by Tom Hibbert from our Chief Investment Office.
Good morning.
Morning. As you know, each week we try to cut through the noise and demystify what's happening in the market so that you feel more informed, confident and in control of your financial future. So this week, Tom, it has been a week of sport.
Much more interesting.
Much more interesting in the markets, but that's not what we're here for. Although I thought what might be quite interesting is to compare three areas of sporting competition in Wimbledon, England's World Cup exploits, and also the rugby, versus three areas of
friction,
contest, competition in the markets.
Okay.
And also, I just wanted to say, did you know that here at Canaccord Wealth, we have had our own sporting achievements with colleagues cycling from London to Paris in support of our charitable foundation?
Incredible.
They've raised over £20,000, you know.
Amazing.
Great. They're mad.
Rather them than me, but
30,
well done to them.
Yeah, well done to them. It was 30-odd degrees heat, so they did really well.
The first pint in Paris would have been quite nice.
Yeah, I'm sure.
Or glass of rosé, whatever it is.
So this week then, I'm asking, where is the greater contest? Is it on the football pitch or is it in the markets? So grab your coffee, let's dive on in. So contest number one, let's talk about
equities
and geopolitical drama, the ongoing political headlines that we're seeing and all the noise coming out of the Middle East. What's happening there then?
Yeah, I mean, I think it's quite clear if you look, and I actually said this on CNBC, that the peace deal was always vulnerable, the memorandum of understanding. And the US had clearly won or was winning the military contest.
Yeah.
But Iran has enough capability to still close the Hormuz.
Yeah.
And fundamentally is therefore winning the economic war. So if you've got the US considers themselves the winner on the one hand and Iran on the economic front, they both think they have the upper hands in the negotiation. And the collapse of the deal, I think it's evidence that there's not enough for them to really find a middle ground or for them to concede in negotiations. And therefore, perhaps we're likely now in a sort of, the tensions are likely to remain high for the time being.
So how does that play out? What tensions does that
within equities?
To equities.
Yeah, I mean, it's because the economies have been so malleable with regards to oil consumption.
Yeah.
Economies have released. The China and the US have drawn down significantly on reserves.
So that's stopped
the equity market has been. The oil prices, you know, at the end of the month, it was at pre-war levels, which is just remarkable.
Yeah.
And oil prices are rising again now. But the market, it just isn't hugely worried about that.
Is the market or are investors underestimating the risk here and the volatility?
I think because reserves have been significantly drawn down, and you can only do that for some time.
Yeah.
Yes, we've been surprised by the flexibility of the economy to adjust to that oil shock. There is a risk that you might see a more sensitive economy going forwards.
I suppose it depends
because you can't keep drawing down on reserves.
Yeah, exactly. How long it's going to rumble on for, I guess.
I think there's that, but also the market isn't as concerned about a material escalation.
Okay.
Because neither side really wants a material escalation. I think that's quite clear as well. So yes, there's an elevated risk of that, but I think the volatility seen in equity markets is capped a little bit by both sides' hesitance to actually material escalate the conflict. So we're likely to see a sort of continuation of elevated tensions, various strikes, but no sort of boots on the ground. You see what I mean? So that's the first area. We're seeing a little bit of volatility in the last week, but maybe not as much as you might have expected.
Yeah. Okay, so football's still willing out as the greater contest at the moment. So what about the corporate bond markets? Actually, I saw this week that Amazon have issued a large bond, $25 billion, was it?
Yeah, that's right.
Huge.
It's one in a long line of hyperscaler issuances. We've seen a huge amount of, CapEx related to the data center build out, the AI build out. And those companies are tapping, their equity markets and corporate bond markets in particular. And we saw Amazon do so last week. Historically, these issuances have been met with huge demand. And we've just started to see a little bit of indigestion.
A little bit of tension creeping in.
We saw that. Yeah, we saw this with Amazon last week. And I think investors since, this month, there's been a little bit of vulnerability within areas of tech generally after a period of extremely strong performance. And we're now seeing that across equity markets and in corporate bond markets as well. And to what extent can the market absorb such massive issuance of new capital? And I think this is likely going to be an area of friction as we look ahead. And will we see that tech capex cycle roll over a little bit? We're starting to see signs of that in June.
Okay, interesting. So third contest that we're looking at in the markets is UK gilts. And UK politics grabbing plenty of attention. And I think UK gilts had another difficult week. We talked about it in quite a lot of detail with Peter last week. So what's worrying investors here then? Where's the tension?
Gilts had actually been very strong in May and through June as well. And gilts are vulnerable on the back of this geopolitical uncertainty that we're seeing and the energy shock related to that. So we're seeing gilts now. Gilt yields are rising at the moment, so prices are falling. A lot of that is driven by the geopolitical developments, but you also have the additional fiscal uncertainty and political uncertainty. And Andy Burnham, I think the area of friction or competition that I would highlight is the bond market's sensitivity to any unfunded spending.
Okay.
And Andy Burnham will want to spend more, and maybe he'll look to relax the fiscal rules. We'll see.
So what would bond investors want from him then?
He'll need to get the bond market on side, and I think what they really want is efficient spending. So he might talk about growth, but they want policies that are actually
deliver growth,
delivering growth, and not excessive spending. It needs to be balanced. And I think the market will be paying close attention to that. Yeah. He really needs to get the support of the bond market before he sort of oversees a significant fiscal expansion. And this is it's easier said than done.
So definitely a potential area of tension there. The contest.
Exactly. And this week, the 10-year gilt yield is back up above 5%. I think that political risk premium, that fiscal uncertainty is likely to remain within the gilt market for the time being. So that's something that we're seeing play out at the moment.
Thank you. So I probably should sum up what is in my Canaccord takeaway coffee cup today. This week's headlines may have been dominated by sport, but definitely geopolitical events seem to be the most important contest for investors across all markets, actually, whether it's equities, corporate bonds or gilts. But the markets appear to remain resilient.
Absolutely. That's a key point.
Yeah. And when we're not watching Wimbledon or the football, you are watching key themes very closely on our behalf. Thank you. Inflation we talked about, particularly linked to oil prices and AI.
Yes.
Government funding and borrowing becoming increasingly expensive. So getting the gilt markets on side. And then we talked about investors becoming the financiers of the enormous AI investment boom, but actually needing a return off the back of that investment going forward. Right. Yes. Otherwise, tensions may rise there.
Exactly. Something that we're monitoring that indigestion in the corporate bond market at the moment.
Lovely. Thank you very much. And as ever, we would say stay focused on diversification, remain flexible, and pay close attention to what the markets are telling us. So once again, thank you very much.
Thanks for having me back, Jane.
And thank you everyone for listening to the Coffee Break podcast. If you've enjoyed it, don't forget to hit follow on your preferred podcast channel of choice and you will never miss an episode. And as always, we'd love to hear your thoughts. Drop us an email, ask us any questions. And the email address is coffeebreak@canaccord.com.
Thank you.
Thank you.
Investment involves risk. The value of investments and the income from them can go down as well as up, and you may not get back the original amount invested. Past performance is not a reliable indicator of future performance. The information provided is not to be treated as specific advice. It has no regard for the specific investment objectives, financial situation, or needs of any specific person or entity. It is accurate at the time of recording and is subject to change.